Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I've got what I think is a wholly positive video for you today, so I hope you enjoy this one. Let's get into it. This is what adoption looks like. The Introduction to Cryptocurrencies and Blockchain course at Stanford now has more students enrolled than the Introduction to Computer Science course. So this is exactly what adoption looks like. And do you want to know what else adoption looks like? Look at what's going on in South Africa. Okay, they can receive Bitcoin using the Lightning Network on these cheap little phones now. You don't have to even have a smartphone, okay? Just any one of these little phones will do it. Check this out. So you can see he's got this old busted phone, right? And you can enter this thing and then connect it to the Lightning wallet. And then you can just send Satoshis or Bitcoin over the Lightning Network. And then receive it via a text message. Look at this. How can you not be excited about this? How can you not be excited about it? Look at this. This is crazy. Let's go. Let's go. So also, further adoption. Over in Hungary, they built a Satoshi Nakamoto statue. So, I don't know. Better than no statue, I guess. Also, whilst I'm here, I wanted to ask you this question. Look at this guy's face, right? Does this face remind you of anything? Because I saw this and I thought, where have I seen this face before? And it just reminded me of this guy, right? I don't know if you know this guy from the Pump It meme. Do you see it? Let me know in the comments. I'd appreciate it. Moving on. Each green dot is a Bitcoin miner. Look how decentralized this thing is. This network is absolutely primed for an enormous bull run. I'm convinced of it. The fundamentals are better than ever. Adoption is better than ever. Decentralization is better than ever. This is absolutely fantastic. Good luck ever stopping this network. 65.82% of Bitcoin supply hasn't moved in at least 1 year. So if you didn't sell on the way down, if you haven't sold by now, if you've held for a year or more and you haven't sold at these levels, then you're not going to sell, right? People are not giving up their Bitcoin. And this shows because Google searches for sell Bitcoin is at a 2-year low, according to Google Trends. Since all the selling has likely stopped, you know what time it is, right? The United Nations have issued a report showing that emerging economies are adopting digital currency. And so you can see here, all the blue is emerging economies, the green would be advanced economies. And this is all the percentages, 12% being the highest and 3% in Australia. In Britain, we are currently at 5% of people using digital currencies. So 95% of this current country is vastly behind, and they better exit the system while they still have the chance. Of course, the question on everyone's mind at the moment is, do the lows hold? So if you haven't watched yesterday's video the day before, go back and check that. Check out the technical analysis. There's a lot of alpha hidden in there. We know there's roughly 80% chance the Dow is going to undercut its low from Friday on Monday morning. So things could get pretty ugly pretty quick. But if you watch those videos, you should be prepared ahead of time and know what to expect. It's not just me that is in the camp that thinks the Fed has lost its mind and the Fed can't continue to behave the way it's behaving, can't continue to act the way it's acting. So I'll play this clip just quickly.
And I think we're giving Powell, honestly, we're giving him too much of a, oh, good, he's standing against inflation. We're giving him too much praise. I mean, listen, the Fed has just, executed the last 2 years one of the biggest policy mistakes in the 110-year history of the Fed by staying so easy when everything was booming and pointing to, my God, inflation is going to be a terrible problem. And now, oh, yeah, we did goof badly there, which he never really admitted. I mean, he still blames some things on Ukraine and, Putin and the supply side, even though oil is way below that level, way beyond that. And now we're saying, oh my God, he's the God that's going to stop inflation, and he's going to crush the wages, which have fallen behind inflation by 3, 4, 5%. You can't have cost push inflation when you're lagging inflation. You can't blame wages for inflation when they're 2, 3, 4, 5% behind inflation. I mean,
he said the other
why
day
is he
that
putting the burden on these working people, on the employed people? That's, I mean, what is, and every other commodity price is going down.
The Fed chair gave you no indication the other day that they're stopping anytime soon.
That's right, and that's why the stock market has cracked this week. He gave no indication that, I mean, if he would have just said, I see some favorable sign, like housing prices are not rising and actually they're falling, or some little thing that our policies are working. I mean, he admitted, you know, there's long lags. Well, if he keeps as tight as he is, look at every market indicator, the Dow, the commodities, real rates, the money supply, everything is showing one of the tightest Feds or intentions of Feds that we've ever had.
So what?
He says
so
there, and he says it works with the lag. Well, if he stays this way through 2023, you can, you know, make sure that there's a major recession on the other side.
So those are the options: major recession or a Fed pivot. We'll find out which one we're going to get. Plan B also thinks that this can't go on for very much longer. He says central banks will resume printing soon. More currency, more reserves, more repos, more IOU. So it's quite possible that the Fed pivot is close. However, we can't, of course, rule out the fact that the Fed could be in the middle of creating a controlled demolition. So we have to be open and unbiased. We'll see how it goes. What a time to be alive. What a time to be a trader. We are, however, in full-on crash mode. Retail traders spent $18 billion buying put option protection last week, which is a record. They are holding $46 billion worth of index futures net short, also a record. Leverage traders are betting on a very, very bad things to happen very, very soon. So potentially we could see a huge short squeeze. That was the first thing that came to my mind. I'm not saying we will, but if everyone's short, then a short squeeze could be the catalyst to drive markets higher in the short term. We'll see how it goes. That would certainly catch a lot of people offside, wouldn't it? You want to see something breaking? Now, on the channel, if you watch the channel, you'll know I often check the US 10-year yield. That's a chart that I'm always paying attention to. But the UK 10-year bond chart is not something I'm ever paying attention to. When I saw this, it just blew my mind. This is actually breaking. Look at this. This is the 10-year bond chart for the UK bonds, right? I mean, wow. Just wow. Still a lot of cognitive dissonance in the markets. The paper futures in precious metals are at multi-year lows, while premiums to buy the physical metal itself are at record highs. So what does this suggest? Well, it suggests that they are manipulating the market downwards using the paper markets, whilst keeping premiums high to prevent people from wanting to buy physical gold to opt out of the system. Gold is one of those trades where you're going to be wrong and wrong and wrong and wrong and wrong many, many times on the entry before finally being more right than you ever thought possible. So I look forward to when the tide finally turns. I think we've got a weekly cycle for gold that moves down into the end of the year. So I will be continuing to bet on that. Once we get towards the end of the year, I think we can buy that weekly cycle aggressively and start the true bull market for gold. I also found this. I thought this was fascinating. Credit Suisse CDS, which is the credit default swaps, are testing great financial crisis levels. So if you've seen The Big Short, you'll know all about this. If not, the CDS, the credit default swap, is like an insurance policy on, at the time of the subprime housing crisis in 2008. This was like an insurance policy on something called a CDO, a collateralized debt obligation. A CDO is essentially a bunch of junk bonds that they aggregate together. They considered this sufficiently diversified to rate it as a safe investment. So what this led to was a huge amount of leverage in the system based on mortgages that were worthless and could never be afforded to be paid back. And of course, it led to a global financial crisis. What's interesting is the banks clearly never ever learn. And as you can see up here, we are right back at those levels for the credit default swaps. So is the housing market about to crash? Could things start to get very, very ugly? It appears that this is almost about to roll over. So who knows? But this is something I think we should all be keeping an eye on in the short to medium term. Bitcoin though, Bitcoin doesn't care. The average 4-year price of Bitcoin, look at this, it just trends up. So this is smoothed out for an average of 4 years and plotted. And you know as well as I do, in 4 years time, we're going to be up into the high 6-figure numbers. I'm sure of that. I've got more data to support this. I will show you in just a second. We needn't overcomplicate it. You can buy when you get across on the moving averages, continue to hold when they cross back above bullish, and then sell when the RSI goes into oversold territory. You can buy, hold, and sell when the RSI. We are now in the accumulation zone. If you've been watching the channel, you'll know I expect us to find our 4-year cycle low around the 11th of November. We will get one of these hold crosses back bullish around the February or March timeframe. And then it will be time to ride the bull market up to the top in the high six figures, I believe, waiting for the RSI to give us an exit signal. 47 days until the 11th of November, so likely only 47 days before we find the final low of this bear market, of this 4-year cycle, and then we can proceed to enter the next bullish phase for Bitcoin. Market cap to thermocap ratio shows that this asset is now trading at a massive discount. This metric shows if the price is trading at a premium or a discount with respect to the total security spent by the miners. And as you can see, this is an incredibly cheap time to be accumulating Bitcoin for the long term. And then lastly, from Plan B, he believes that when we halve in 2024, the halving is going to have an enormous impact on the Bitcoin price. He says his prediction is Bitcoin will be between $100,000 and $1 million in 2025, signaled by this yellow box here. So from the current levels at around $19,000, that's between 500% and 5,000% return on investment over the next few years. He said this forecast is not accurate, but it's better roughly right than precisely wrong. And I think we've spent so much time underneath the stock to flow model that reversion to the mean and the laws of averages suggest that we're much more likely to be gapping above this and then coming back down into it. I would bet that we are likely going to be closer to 1 million than 100,000 by 2025. So that remains to be seen for now. I think we're getting incredibly close. Like I said, we're only about 47 days away. So I believe the hype is going to come back. I believe the hype is going to be stronger than ever. I believe this bull run is going to be the bull run of all bull runs. And I can't wait to experience this, to be a part of this, and to be trading it all the way up. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already. Throw down in the comments if there is anything you have to say or anything you want to see from me. And in the meantime, enjoy the rest of your weekend. All the best from me. Take care. Cheers. Bye.